In today's complex financial landscape, ensuring accuracy and reliability in investment appraisals is essential. Most experts use Excel to build financial models. However, integrating Excel with a robust statistical software like Stata provides significant advantages, particularly for large-scale or critical analyses. This dual-tool approach bridges traditional tools with modern analytics, enhancing both accuracy and efficiency. Leveraging Stata to double-check every metric ensures precision, reliability, and a robust framework for cost-benefit analysis, investment appraisal, and risk analysis. One of the Excel's limitations is in error diagnostics. Diagnosing errors in large Excel models can be challenging. Stata can validate calculations, ensuring model integrity and reducing potential risks. Stata's command-based approach creates a clear audit trail, simplifying the understanding and review of complex calculations compared to Excel formulas. A Stata-based model serves as a reliable benchmark to cross-validate Excel outputs. Discrepancies between the tools can quickly highlight errors in formulas, data inputs, or assumptions, significantly reducing financial and reputational risks. Other advantages of Stata over Excel are: 1. Reproducibility. Stata has a script-based workflow. It uses do files, ensuring every analysis step is documented and reproducible. This is a significant improvement over Excel, where tracking changes and deriving results can be cumbersome. 2. Error detection and debugging. Stata provides clear error messages, helping users quickly identify and resolve issues. In contrast, Excel errors such as #value or #ref often lack clarity. Stata allows users to test and debug specific parts of their code, making it superior to Excel's manual formula tracing. 3. Security. Stata scripts and datasets are less prone to accidental edits compared to Excel files, where unintentional changes to cells or formulas can go unnoticed, potentially compromising the analysis. Stata complements Excel by addressing its limitations, offering enhanced error detection, reproducibility, and security, while handling larger datasets with greater efficiency. The dual-tool approach of integrating Stata and Excel ensures not only error reduction and cross-validation, but also builds a robust foundation for accurate and transparent decision-making in financial modeling. My name is Amin Sokanvar, an economist specializing in investment appraisal and risk analysis. My expertise extends beyond traditional financial modeling, as I develop and implement innovative tools to enhance accuracy and reliability in decision-making. I evaluate projects by analyzing key financial metrics such as NPV, IRR, ADSCR, and LLCR. These metrics help me assess a project's profitability, feasibility, and ability to meet financial obligations, ensuring that the project is financially sound and viable for stakeholders. I also conduct sensitivity and risk analysis to examine how changes in variables like costs, inflation, or interest rates impact project outcomes. This helps me identify potential risks and ensure robust decision-making. By double-checking the financial analysis in Stata, I diagnose the model and identify any possible errors. This cross-validation ensures the calculations are accurate and consistent, enhancing the reliability of the financial projections and decision-making process. Here is an example of what I do. This project involves assessing the feasibility of constructing a steel manufacturing plant. Key aspects include managing costs for land, machinery, and construction. The plant aims to produce 1.4 million tons annually from year 6, with government-controlled prices for rolled steel products. Financial analysis involves calculating NPV for equity holders using a 12% discount rate, assessing debt service ratios, and performing sensitivity analyses on inflation rates, prices, and cost overruns. The financial model is first built in Excel, covering calculations for investment costs, production and sales, labor expenses, loan schedules, and income tax. Key metrics like ADSCR, LLCR, IRR, and NPV are calculated, with the project showing an NPV of $7,790 and an IRR of 12.4%. To confirm accuracy, the model is recreated in Stata using a script that recalculates these metrics and saves the results in an Excel file. All metrics, including ADSCR, LLCR, IRR, and NPV, match exactly, confirming the analysis is accurate and reliable. And here is a part of the results from the sensitivity analysis. This graph illustrates how different metrics vary with changes in inflation. With this dual-tool approach, I not only deliver accurate analyses but also provide strategic insights to drive sound decision-making. Let's discuss how I can bring this expertise to your team. You can reach me at sokanvar.c@gmail.com or call me at 164-727-34552.